Please welcome our next session's moderator, Tom Brown, Senior Counsel at Paul Hastings, and distinguished guest, Jack McDonald, CEO of Standard Custody and SVP of Stablecoin at Ripple.
Well, hello, Jack, and the 25 people who are here.
That's right.
And hopefully can hear us. Let us know if I'm not using my rock star voice loud enough, but hopefully it carries. Well, Jack, we're far from our respective homes. We both actually live in San Francisco. You're a North Side guy. I'm a South Side guy. We've had long parallel careers in financial services. You started at UBS, and then have worked your way into the digital asset ecosystem, and now, of course, run the Ripple stablecoin project after having been acquired. I'd love for you to help us anchor where you see Ripple and stablecoins going based on your long history in financial services and specifically capital markets.
Yeah, well, thank you. It's fun being here. It's the literal and proverbial echo chamber. And I don't know about you, but I keep hearing the word stablecoin. So I keep looking around because we're used to being at conferences that aren't just stablecoin specific. So this is fun being in a like-minded crowd. But you know, to your point, the origin story for Ripple, if you go back 2014 or so, the foundation was really around cross-border payments, and I think in many ways Ripple was very early into this concept of using blockchain technology to really transfer wealth cross-border, and had really instantly, very cost-effectively, and
right, without squandering megawatts of power for every transaction.
Right. And really purpose-built the XRP ledger to do that, I later learned. You know, my experience in traditional capital markets was seeing a lot of the inefficiencies that existed just in terms of, and I grew up in the kind of prime brokerage trade, settlement, clearing world, and that delay of timing of settlement and the movement of fiat and all the friction that was around that. And so having sold a prior company called Conifer that was in that business, I had the opportunity to join an early co-founder of Ripple to build Standard Custody.
Arthur, right?
Arthur Brito.
Yeah.
And I thought that it would be a year and it would have this very binary outcome, that it would either reveal itself or not. Things take a little longer, sometimes these big megatrends, but it just seemed like this confluence of traditional finance into crypto had an enormous opportunity to really be innovative. And Ripple, I think, has just taken that on steroids. And what we've done from payments, and then realizing that custody is a big component of that, and making the acquisition of Medico a couple years ago, the acquisition of Standard Custody, the DFS-regulated trust company, to really help them usher in the stablecoin, having had a front row seat for stablecoins and payments and seeing all the advantages of that, and now being in the stablecoin business, and then what's coming next, the Hidden Road acquisition, everything, you know, to us makes sense in this vertically integrated, really blockchain-enabled, in many ways, end-to-end solution for our customers.
Yeah, can you walk us through some of the intuition behind the Hidden Road acquisition? I think for lots of people, the intersection between I'll be honest, I find it odd that it's not more intuitive to people, but the sort of intersection between capital markets, real-time payments, tokenized assets, can you share a little bit why Hidden Road fits into that sort of intersection?
Yeah, and it's an interesting story that's not intuitive to everybody. And at the time we announced the acquisition, we got a lot of really positive feedback saying, wow, now that I think about it, that's brilliant. You know, why didn't someone do that before? Hidden Road, for those of you who don't know, is the largest non-bank owned prime broker. So they don't trade, they're in the lend-borrow business and provide margin financing to, interestingly, more traditional finance customers than crypto native customers. And the business has been run exceptionally well. Mark Ash, the founder, and his leadership team, many of which I've known in the TradFi space, Ripple has a quiet, but I'd say powerful trading business where we've executed trades on behalf of our payments customers over time, and certainly helpful in what we're doing with RLUSD, the stablecoin. So Hidden Road was a trading partner of ours, and we've known them for years, and the opportunity to invest in them came about in the fourth quarter of last year, and I think someone within Ripple said, maybe this is actually more interesting if we do more and bring you into the family, as it were. And the vision really, and I'm thrilled from a stablecoin perspective, because one of our thesis at the end of last year was around this confluence of capital markets coming together with digital assets, which will evolve over time. It's not going to be this, big bang sort of theory, but the idea was that increasingly stablecoins can be used as a form of good collateral, as a cross-asset class margining tool. It can be used in instant settlement, and there's no reason why traditional finance shouldn't take advantage of that, other than the fact that it's not readily available to them, or that there's a knowledge gap, or that there's a lack of regulatory clarity. And a lot of those, I think, blockers have been one by one knocked down. Hidden Road, and don't quote me on this, but I think their client base was roughly 70% TradFi, 30% crypto or whatnot. And what their mission is, in part, is to bridge the divide. One of the mantras we have within Ripple is being the blue glue, really bringing web-enabled or blockchain-enabled digital asset solutions to traditional finance. All of our clients from day one have been institutions or enterprises, and so it very much makes sense to us, the sort of client base that they're going after, and to the extent that we can help facilitate ushering in those TradFi clients, taking advantage to start using RLUSD, makes a lot of sense to us, and the reception we've been given is quite positive. Last thing I would say is that the one hindrance that the Hidden Road business has had, that they would tell you and that their customers would tell you, is just a lack of balance sheet. And it's something that we're blessed with at Ripple.
You can solve that problem.
We've helped to solve for that.
I think, as you know, I am and have been an investor in the space. Proud now to be directly on the Ripple cap table. So do pay a little attention to the balance sheet. And last I saw, there was $3 billion in cash, and many billions of other assets. So definitely a balance sheet heavy business. But I just wanted to anchor a little bit of this discussion about capital markets, because I think this is probably mostly a payments-y crowd, if I had to guess. A little bit of audience interaction, like how many people would identify themselves as sort of more payments types? How many capital markets types? And then everybody else is opting out. I'm going to call you a payments type if you didn't make a specific choice. It's my prerogative since I'm the one speaking. But so we talk about payments. US GDP last year, roughly 7 trillion, I think. That's a big number. Yep. Global daily volume in US major equity markets is 652 billion. So every 10 days, you get the same turnover in equity capital markets in the United States that you get in the entire US economy. Like the opportunity to digitize settlement, both for the dollars involved in those trades, as well as the other assets that we currently use, fairly archaic technology, is just enormous. And I mean, you guys clearly see it. I think other people have been laying a trail of breadcrumbs.
Right.
Kraken announced, right, the support for equity trades outside the United States. Robinhood is supporting.
Robinhood's been leading the charge there.
Right.
Obviously Coinbase and Deribit, and there's a number of other examples there where you're seeing this intersection. I happen to think that we think about what's going to be the needle mover, and I think in many ways the 0 to, call it, 240 billion of stablecoin growth over the years, which has been impressive, has been largely fueled by retail investors, largely fueled by crypto trading and crypto investments. We happen to think that the next 10x from here over the next, fill in the number of years, is going to be more institutional driven. And so part of our playbook is trying to respond to that. Day one at Ripple, we've always focused on institutions. Those are our customers, or the big banks, financial institutions, payment service providers, et cetera. And we think specifically within the stablecoin business, but more broadly within all of our products, whether it's in payments or custody or now stablecoins, that being regulated actually matters. And it's going to matter to that future client base who are used to using regulated counterparties, but haven't really had as many choices in the stablecoin space. You know, we've enjoyed a great relationship with New York Department of Financial Services, and we think that brand recognition, if you will, by having gone through the rigor of what it takes to be licensed by DFS and then the ongoing scrutiny that we go through will lend a lot of confidence to big institutions who want to wade into this space. I mean, I think there's an education gap by many corporates and more TradFi players that don't really fundamentally understand the difference between a stablecoin and a meme coin. We have to get through that barricade first. But I think if we can get through that and people start to understand that stablecoins can be used really as a proxy for a US dollar payment, and you can do it in a regulated way by being regulated as we are, by using the banks that we use, by using the auditors that we use, that there is going to be a big unlock there going forward.
Yeah, and for folks who want help in navigating DFS, my old friend and now once again colleague Dana Syracuse, who I think you may work with, Jack, is sitting here. So you know, this is a real pillar within the Paul Hastings firm, the work that we do with regulators around the world, but particular here in New York, thanks to Dana. No, I mean, like, it's Adrian's, you know, maybe walking around like, you know, it's the oldest bank regulator in the United States. I think the third largest in terms of assets after the Fed and the OCC.
And have done an enormous amount of work in digital assets.
Right. Not always popular at the time, but I think if you look at the work that people like Ben Losky and others did to open the New York ecosystem to digital assets, it has really part of the reason we're all here in New York. So, and you mentioned the need for digital assets as it moves into these use cases to be treated as really an equivalent to cash or funds on deposit at a bank. Like, what do you see both from a sort of technology infrastructure perspective, and are there key sort of regulatory developments that you're watching?
Yes, from a regulatory standpoint, getting regulators and exchanges and different bodies, there's really two prisms to look through. One is just nationally in the US, another is globally. We'll talk about the global harmonization in a moment, but getting regulators to recognize a stablecoin as good collateral or can be used for regulatory capital will be a huge unlock. You know, we would make the argument that a stablecoin, if you look at it, and not all stablecoins are the same. You've got 99% are US dollar backed, air quotes, but you know, when you really drill into it, not all are the same. In our case, a very straight down the middle, it's US dollars, cash that we invest in, treasuries and government money market funds. You could put a wrapper around that in a tokenized form, but in essence what we are is a basket of undeniable good collateral.
Right, and where the holder of the token has a claim to the underlying collateral that is money good.
That's right. And again, not all stablecoins
are the same,
but
right.
In our case, we hold them in a bankruptcy remote account as a fiduciary.
Redeemable at par.
Redeemable at par. So you think about if we can get certain regulators or exchanges and others treating that as good collateral, then it allows more TradFi customers to come in and post that, and you can use it 24/7 and lend and borrow against it, which dovetails right into what the Hidden Road value exchange is all about.
I mean, not to geek out on this too much, but as I think some folks, well, actually Dana might be the only person who knows my interest in this, but I got obsessed with Article 12 of the UCC, I think 3 years ago now.
You may have been the only two that got obsessed about that, but.
Yeah, now adopted, I think, in 28 states. Again, if you want to create a true native digital equivalent to dollars in a bank account, Article 12 provides a path, and it should be treated as collateral. It provides not just for capital markets, but also treasury management for businesses
right.
that are required to hold a lot of cash,
Yeah.
like licensed money transmitters, banks.
That's right. Well, I was at a roundtable yesterday with a lot of corporate treasurers, and they were talking about the fact that stablecoins still are not treated as cash equivalents from a GAAP perspective. And so if you just think about what the unlock there would be, and then you think about what a Walmart or a Nestle or a
Right.
GE could do globally, and how they would, they're already starting to wade into this space using stablecoins as a cross-border payment, but if you can also have it on your balance sheet as a cash
Well,
equivalent.
yeah, and there's no particular. I mean, we could talk about this a lot. Like, my point of view, and I've had some conversations with regulators about this, wearing various hats. But certainly post Article 12, if you tokenize a deposit or you tokenize ownership on a fractional basis of very liquid collateral, so that the conveyance of that token conveys ownership of that asset, like that should be treated as a cash equivalent.
That's
Like,
right.
and I recognize that maybe there's some work to do there, but that feels like it should be happening soon.
Yeah, and I think there's a lot of chatter about deposit tokens specifically within the banks. And I think the big difference there is I think of many of the bank tokenized deposits as working intra-bank, but they're not yet permissionless, where a stablecoin is permissionless, right? And has that ability
Right.
to...
But you can imagine stacking them, right?
sure.
So,
For sure.
stable to tokenized deposit,
That's right.
tokenized deposit back to stable, depending on sort of what use cases a bank wants to support.
Well, I think Circle's acquisition of Hatchnote, I think is starting to scratch at that opportunity set. Right?
Right, and there's some folks walking around here that are sort of, I think, earlier in that journey, but sort of pointing at the direction to help banks and others in the ecosystem do that. Stablecore, for example. But again, right? Like, this is all a pull towards activity that is capital markets, treasury, and not as much payments.
That's right.
But partly because if you're just looking at the total volumes, the capital markets just dominate.
Oh, it dwarfs payments. Right. And I think, as I said earlier, I think it's going to be more of an evolution than a revolution, but you can certainly envision a world. And we're seeing bits of this, and if you look at, going back to Robinhood, where you can buy a tokenized, or a fractional, I should say, version of a stock. Mm-hmm. You want to buy $100 worth of Berkshire Hathaway, you can do that now. And so...
do you wish you'd done that back in your day at UBS?
I do. I do.
Yeah.
The other thing I would say...
It's always funny to me that Warren took such pride in having his stock be sort of inaccessible.
Yeah.
And then somebody made it accessible and people bought more of it.
That's right. He's had a good run.
He's done okay.
Yeah. But as we talk about legislation, the other thing I think about is how we can get some global harmonization here. And not all regulators are the same. Within the U.S. and obviously the proposed legislation that's out preserves a state pathway, which we're very excited about, given the good work that New York has done. We don't want to have an unintended consequence or race to the bottom where any state without the type of experience could issue licenses for this. In the same way, you think about a global need to have some harmonization, and that's really never been done before, at this sort of order of magnitude. So it's something that we continue to follow. We've got offices around the world. We've got licenses around the world, and so we've got some pretty good endpoints to draw from. But that's, I think, going to be an exciting space to watch, to see, because of the global nature and the 24/7 nature of crypto and stablecoins specifically, whether or not other regional and specifically the EU.
Well, the EU. I mean, we can talk a little bit about MiCA. In some ways, and Europe are a little, arguably ahead on some dimensions of stablecoin regulation specifically. And I'm curious if you're seeing that translate into market activity in Europe.
There's definite demand for U.S. dollar stablecoins in Europe. The euro-backed stablecoin, which you get asked a lot about, hasn't really taken off, but I think it's only a matter of time. I think what we're watching closely within the EEA is when and if, or hopefully soon, we'll get some guidance from the EEA around stablecoin issuance and dual issuance, because In a perfect world, we'd like to have a dual issuance model where you could issue, one RLUSD potentially from different entities, but it's completely fungible. And because these stablecoins today or crypto assets are not geotagged, you never know exactly where they travel, and yet appropriately regulators want to ensure that there's a requisite amount of reserves in any one jurisdiction to meet redemptions whenever they come. We're confident in how we would manage that, and we use big global custodians where the reserves sit and protect the bankruptcy remote accounts, and you can move them quite fluidly. But we have part of it's an education, and part of it's a legislative advancement. I think that's going to have to happen outside the U.S. to recognize that dual issuance model. And within the EEA, there are different countries that have different views on that. And so getting some harmonization within the EEA will then allow, I think, us to think about it more fluidly.
Are there other, as you look globally, other regions or countries that you think are sort of bringing themselves into the stablecoin economy in productive ways?
Yeah, I would say just the UAE in general. I mean, I was just at Token 49 a couple of weeks ago. We just got a license in Dubai. I think that whole region is really leaning forward and doing a lot in terms of digital assets and paving the way in a very collaborative and innovative way. There's pockets within Europe. Switzerland obviously has been front-footed.
Singapore?
Singapore for sure. We've got an office there as well, and are in good standing. I think places to watch: Hong Kong, what's happening there from a licensing standpoint. Also Japan. They represent big money centers if you think about M2 supply and whatnot, and yet relatively nascent in terms of crypto and Web3 adoption and stablecoin adoption. But sitting here 2-3 years from now, I think you'll see growth in those regions for sure.
Well, let's bring it back to the U.S. and recognizing that we don't have a ton of time left. You and I met a little more than a year ago in London. We were hosted by Zero Hash and had a panel on stablecoins. There were not nearly as many people at that event. There were even fewer people who sort of watched the panel. I think they all could have fit in 3 rows. Obviously, we're now at an event that, although not packed from a content perspective because the acoustics are terrible, I hope Nick is listening. He probably can't hear me. But world has moved. And even when we did the prep for this, we were talking about interest and what signs we would look for from traditional financial institution adoption and interest. I'm curious what you've seen and what mileposts you're sort of looking at over the course of the next year, 3 years, 5 years, that will reinforce your view that this is the future path for value exchange. Yeah,
I would say 2 things that have happened that are milestones, that are needle-moving sort of events. The legislative tailwind that we've had in the U.S. really unprecedented, and we've all seen what it's done to the market. Momentum has a very powerful impact on actors in the space, right? Whether you're an institution, whether you're a private company, whether you're a regulator, we've just had a total sea change. And when the U.S. has that type of sea change, particularly where we've come from at the federal level over the last couple of years, the world sits up and takes notice. That, and I think the Bridge Stripe deal was a shot across the bow for the infrastructure layer, recognizing the value. Put the valuation aside, but the amount of companies that we have the good fortune of seeing who are coming, who want to be a part of this future stablecoin on-off ramp business is really powerful. Looking forward, a couple of the I think milestones that I think will be significant in terms of the growth and adoption. One thing I was touched on earlier, seeing the use case specifically within capital markets is going to be really meaningful. And if you can get stable coins treated as cash equivalents on a balance sheet, treated as good collateral or regulatory capital with the regulators, you're going to see, I think, a very significant and steady adoption by traditional finance players, which, to the numbers you were forecasting earlier, even if we make a small dent in that, that is a massive, massive change from where we are today. And the other thing that we look at from a payment standpoint, again, having been in cross-border payments for years, getting mainstream corporate treasurers to start to use stable coins and really understanding that difference between a meme coin and a stable coin and feeling comfortable with using companies like Ripple to move wealth cross-border in a meaningful way and using stable coins where it makes sense as a dollar equivalent. That's, I think, a bell-ringing sort of moment for us.
Yeah, congratulations. It's really, really, really interesting. I mean, for me, having been involved in the earliest days of Ripple and seeing where it is now. I know we'll both be back home in NSF, but congrats on all the progress in the last 12 months, and maybe we'll get to do it. Maybe we'll do this once again next year.
It's great. Thank you.